We could be weeks away from collapse. Hey, everybody, you're watching Bull, Boom, Bear, Bust. My name is JJ, back with another dose of economic reality. Let's talk about the banks today. The banks are in big trouble, regardless of how calm things look on the surface. Banks are in big trouble. It's not being widely reported. Now, if you've been on this channel, you know going years back, I've always said that the banks were basically insolvent, right? Because they don't have actual money. They're loaning out digits on a screen. There's not even there's no sort of reserve requirement. That means the banks can loan out money even without money in deposit, right? So people could do a bank run, pull all the money out of the bank, but yet the bank can still loan out money. How insane is that, right? Well, let's talk about what many others are talking about as well. And this is the bank bailout program, which I call it a bailout. The technical term is the Bank Term Funding Program. And let's go right to an article, and then we're going to look at a chart on this one here. This one comes out of American Banker. The Fed's rosier outlook could mean end of emergency lending facility. Folks, that's what I've been calling a bailout. Of course, they are not going to call it a bailout because that would alarm people. What do you mean the banks are being bailed out? What's wrong? What's wrong with the economy? The stock market's at all-time high. Why are the banks in trouble? How can that be possible? So yes, they're not going to call it that. Jerome Powell, chairman, said last month the central bank has not begun discussing whether or not to wind down the Bank Term Funding Program. This is a facility meant to allow banks to sell underwater securities at par. So basically, it's a rescue program. These banks are heavily underwater on their loan portfolios, especially commercial real estate. And this is a disaster. We're talking almost $700 billion amongst all the banks. That's how much they're underwater. It was 650 billion, right around there. So this is being used to keep the banks operational. I've always said here, they're going to find new programs, new ways to continue to kick the can down the road. That's why I'm not one to put timelines on things. I'm not one to put timelines on things. People often say, oh, you predicted a collapse. I predict an ongoing collapse of the U.S. consumer, but not of the banking system. There's continuous road to kick the can down. They can come out with new programs, bailouts, funding programs. They'll come up with new names for these programs so people have no idea that there's actually anything happening, right? They hear a name like the Bank Term Funding Program and nobody thinks anything of it. Oh, that's typical, right? Well, no, this has been going on since the banks failed back in March. We had a string of bank failures here in the US, and the Bank Term Funding Program was supposed to be temporary. Well, here we are, and it's actually getting much worse. And this is just out as of the last few days here. Let's bring up a chart here. Look to the upper right corner here. The amounts that are being pumped into the banks or used to rescue the banks is surging again here if you look at the shaded area. So, of course, we saw the big increase back in March from nothing up to, was it 8 billion at the time? 80 billion, I'm sorry. I always underestimate things. And this is exploding. This is exploding upward. I mean, people thought, I shouldn't say we thought. I've always said that this is going to get worse. But there are people out there that thought, things were going to get better, that the banks are on solid footing, that we don't need this rescue program anymore. And in a few months, it's going to be a year since the bank collapsed. Well, what, 3 months till March? And, there's no sign of this program stopping. In fact, it keeps getting worse. So you have a mixture of reactions to this and analysis. Some people say this is a sign that banks are going to collapse. I don't think so. I think they're going to do whatever it takes to keep the banks operational, especially the mega banks, the too big to fail banks. Other people say that there's got to be an end to this, that there's a limit. Well, if you want to talk about limits, there is no limit, right? The dollar was completely removed off of the gold standard in the early 70s. So therefore, there's no limit to the amount of money they can throw at this thing. The problem comes when you see inflation stick around, and what are we seeing now? We're seeing inflation stick around, even though the Fed is pretending they've won the war on inflation. but that's it. They're just pretending. They have not won the war on inflation. Prices are still going up. Yes, they're going up more slowly, and they're out there acting like this is a victory. Oh, look, we slowed down inflation. So the fact that they've slowed inflation, well, they've slowed it from insane levels, but it's still going up, right? So this is, in my opinion, inflationary. Yes, we will still see some parts of the economy, some sectors, some areas like real estate continue to decline, even though the news is telling us that prices are up. Yes, they're up year over year, slightly, but actually in many markets it's down. It's mixed. But if you look at it from the peak, real estate is down pretty significantly. Cars are starting to collapse. Look at EV cars, electric vehicles, down an average of 30%. Imagine being 30% underwater on loan. That's insane, right? Let's say you bought a $60,000 electric vehicle and now it's 40,000, and you've barely, made a year's worth of payments in the time that it's collapsed by 30%. That's pretty insane. But that's what mania gets you. That's what mania gets you. And that's what we saw with the electric cars and the part shortages and the inflation, and the gas prices were crazy high. So people rushed out to buy electric cars. Now we're seeing the repercussions. What else are we seeing a mania in? We're seeing a mania in the money printing, the amount of debt, the deficits, the national debt's exploding like we've never seen before. Um, and this is going to be inflationary. So even with all this money printing, this new debt, all the loans being issued out there, record amounts of debt amongst U.S. consumers, we're still seeing deflation in some areas. What does that tell you? That tells you that people are buying less of optional items, discretionary items, and things they don't have to have. Like if you can hold off on a vehicle, if you can live without a new vehicle or used vehicle, people are keeping their vehicles for longer. We're seeing a record as far as the age of the average vehicle on the road. I believe it's now between 13 and 14 years old for the typical used car on the market. So people are pulling back on this type of spending because a lot of the savings that they have is going towards must haves. We're talking about food. We're talking about paying the rent, paying the mortgage, things you have to pay. Otherwise, you're going to be in big, big trouble, right? So I am hesitant to talk about this, but there is a prediction out there that in March, there's going to be some sort of massive collapse. So I should say by March. It could happen anytime, but here's supposedly what's going to happen. Now, I say supposedly because they could come out and just say, no, we changed our mind. We're not going to do this. They're supposed to be ending this emergency funding program into the banks by March. But here's the thing. We've heard this before in a lot of different times. We've heard that we're not going to cut rates, right? All of a sudden now, a couple weeks ago, they came out and said, well, we're thinking about cutting rates, 3 rate cuts in 2024. So what they say one day can be completely reversed and revised and erased the very next day. But here is what is being said here regarding this bank bailout program, aka Bank Term Funding Program. The facility has a current authorization that expires in March. Much will depend on the trajectory of inflation and the Fed funds rate, which is expected to tick down next year. Here's the thing, that's the current authorization. It expires in March. What do they usually do? They usually extend it, extend it, extend it. Here's an example. The student loan payments we heard for years, starting in 2022, we're going to resume student loans. Okay, then they delayed it. They kicked the can. They delayed it. Finally, this October, it reinstated or resumed the payments. And what do we see? We saw a spike between the numbers range from 40 to 60% of people with student loans couldn't make their payments. Different reports out there. Some say 40%, some say 60%, but nonetheless, it was a large number. And this just goes to show you the reason why they hesitated so long to reinstate this. If the consumer was really strong and resilient, if the economy was strong, why can't we continue to raise interest rates? Why can't we have people just resume making their normal payments, money that they borrowed? Why do we have to have all these rescue programs? That's what I want you to ask yourself. Then you'll know what's really going on here. So I think this whole house of cards eventually is going to come down. We're going back to ultimately a hard asset-backed currency. Look at what the BRICS nations are doing. We had Putin out there visiting the United Arab Emirates, and there's been a bounty out basically on his head, but yet he's still going around to these other BRICS countries and making deals, making alliances. And ultimately, we're going back to sound money now. There's going to be an introduction of this digital currency, this central bank digital currency. They're going to try to introduce that, and I'm not sure how long that's going to last, but they are going to make an effort for it. But we see a lot of the world is turning their back, not just on the US dollar, but on fiat money in general. And I think that's only going to escalate as the world realizes what the United States has been doing by basically using and abusing the world reserve currency. And now there's a lot of countries now going out against the US, trading outside of the dollar. For a country to do that, that would have been an act of war just a few years ago. Now there's so many countries doing it that the United States can't possibly go to war against all these countries, right? So we can fund wars, though. We can create money, run up the debt, and send money to this country, that country, over here, over there to keep these wars funded. All right, folks. So it's all propped up on funny money until the spigot of funny money gets shut off, until the printer gets shut down. Shut it down. Turn that power down, right? Pull the lever, power down, pull the plug, whatever you want to call it. Until that money spigot gets shut off, it's going to be more inflation than deflation, I'm afraid. We're going to see, a little of this, a little of that. It's going to be mixed, right? So it's a very challenging environment. That's why it's more important than ever to pay attention to all this stuff. Come back to this channel. Please like, subscribe if you like what we talk about here. We're going to get through this together and probably even profit on the other side because we know what to invest in, folks. Everybody, thanks for watching. We'll talk to you very soon. Peace.